Salud! Welcome back to the show, you guys. I took a little break this past week. I was traveling through California, meeting new clients, setting people up for what is to come for Financial Reboot, which is really exciting. As I mentioned during our Facebook Live broadcast the other day, we've got huge things. So if you're not a client at Financial Reboot, you're probably going to want to be a client like immediately because it's going to change your life. It's just going to change your life. I could say that with total conviction because I know what's coming. And if you're just sitting back on the sidelines and watching the show, that ain't going to cut it. So pay attention to what we're doing, but more so take action. Now look, in I think our last show, we had talked about NVAX. If you remember that, in fact, we had a guy post in the Facebook chat. If you remember, he's like, "I wouldn't."
We had a troll show up. We had our first troll.
You know you're successful when you got a troll showing up on your Facebook feeds. So this guy said, "I wouldn't let you walk my NVAX is the report. And I wouldn't let you walk my dog." And we replied back, "Well, damn good thing because we don't do dog walking services.
We don't do dog walking."
So. Why don't we tell everybody why we got into NVAX and what happened, and we'll mop it up in the back end because you're going to want to pay attention to this because, guys, look, if you cut us, we bleed. We just don't bleed out, right? That's kind of the point.
Absolutely. Yeah. So Novavex, I mean, we've been talking about it for a couple of weeks. We had a client that came in with a heavy position in it. We called it as a core portfolio, as a play for the rest of our clients. Of course, whenever we call a play for our clients, we do not put everything in one play. So we minimize our risk exposure, and we did that. But the way Novavex went down was we were playing it because they were in a phase 3 trial. Unfortunately, it turned out that the phase 3 trial, the placebo drug, was more effective than the actual drug. Not a good thing. But this all happened after market. So the stock closed a little over $8 that night, and about an hour after the market closed, it was stopped. Then when it reopened, it was $1.34. 84% loss. So
84%. Hang on, let me interrupt.
Yeah.
So this was this is important that you guys understand this. This was an 84% loss without the market being open.
Yeah. We were defenseless at that point.
We were defenseless. It's like, anyway, continue.
But we're not rookies, so we know what to do. The first thing we did was we took the stop loss off it, so it didn't tap out at $1.30 when the market opened.
Okay, slow down. Explain to them exactly what that means, because this is important. We had a client that brought us NVAX that loved it. He was heavy. I mean, he had every penny he owned in NVAX. When he brought us the portfolio, he said, "I don't want to sell it. What do we do? I want this." So let's talk about that, because this is important.
Well, because if we left the stop loss on, it's going to tap where it opens, and it'll open at about, I think it was $1.34. I mean, it was literally an 85% loss. But we didn't want to tap out on it because we absolutely believe that this is not a $1.34 stock, right, even without the phase 3 trial. It's got a Zika drug in the works. It's got an Ebola drug in the works. If you ask us, we think there's a potential for a buyout situation because there's a lot of competition right now for these Zika drugs and their development. As you see the news, I mean, you're seeing more Zika breakouts. It's become a much more serious situation than people anticipated. So there was no reason we wanted to let go of this stock at $1.34. Well, we turned out right because 4 or 5 days later, it's already back over $2, and it's got a lot of momentum going up. Yeah. There's a lot of, if you watch the message boards, there's a lot of guys getting into it. But if you look at the insider trading, all of their insiders, their corporate officers, right after this 84% fall, started buying the common stock. So they know what's going on. Yeah, they can't say certain things because of SEC rules, but you can tell by their actions. Actions speak louder than words. Yep. So watch their actions.
So if you're in NVAX and you did take that loss, like some of us did, stick around. Stick around. Unless you absolutely need to sell and get out of it just to put bread on your table. But we suggest if you did have that stock, hang on to it because we still see things.
You should be able to get something back way better than $1.34. Remember, if you tapped out at $1.34, the money is gone.
Yeah, that's right.
The potential is gone. The money is gone. The play's done. And like I said, we feel like Novavex, it's more than just that one clinical trial. Plus, they can restart the trial.
Right.
There's a lot of things that can go on. With
so that one particular client of ours, a good friend of ours, who was heavy in Novax, the first thing he did that next morning is says, "Why didn't we put a stop loss on it?" So can you just touch on that one more time so they really understand how that works?
Because we had spoke with him before, and we had talked about putting a stop loss on it. We had the stop loss on it, but once we explained to him what we were doing, and once that the stock started to recoup a little bit and get a little momentum back into it, the insider buying, he realized that we did the right thing. Because if we had left the stop loss on it, he would have lost just a tremendous amount of money.
Yep.
But now he's starting to recoup it, and plus too, we recouped him some money with the our options plays.
And remember, guys, you know, when we show our human side, which we do occasionally, right? We bounce right back. I mean, we got him in that next play, you know, what, days after?
2 days later.
2 days later, and he already's up another 50%.
And that's the thing. I mean, you know, that's why you don't want to overexpose yourself to any one play. You have to have dry powder, because you need to, if these things happen, you need to be able to recover. You need to be able to make moves to get your money back.
So listen, we're big boys and big girls here at Financial Reboot. We want you to be responsible for your stuff too. So again, when you cut us, we bleed. We just don't bleed out. Yeah. A lot of you out there, you know, you put so much money into these plays. And actually, we're going to talk about that in this show this week, because this is a huge thing we see too many people doing. They just like, ooh, NVAX, ooh, GLD, let's go all in. And then if it happens, great. If it doesn't, they're done.
Right.
And so we don't want to, I was going to use a word. Anyway, we don't want to over leverage. It shows you I actually went to college.
This is not poker. We don't go all in.
Right. So we're going to show you that in the upcoming segment. But in the next segment, I want to talk about how we got right back on the train.
You bet.
How we took it on the chin with NVX, and how we got right back on the train within 2 days, I believe it was.
Yeah. This is not our first rodeo.
It's not our first rodeo, y'all. So,
and the loss wasn't so bad that we're walking dogs for extra revenue. So.
Yeah. So listen, let's take a quick break. I'm going to fill up. We're going to get right back, and we're going to show you exactly what we did to make another 50% in a few days. We're going to take a quick break.